Hey everyone, welcome back to Corporate Decoder. Collective Acquisition Corp, ticker CAIIU, just filed an 8K reporting its initial public offering, and I'm seeing some early investor red flags. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is essentially a shell company that raised money to buy another company. The key here is understanding how that initial public offering was structured and what it means for early investors. So Collective Acquisition Corp II, or CAII in ticker terms, has officially gone public. They completed their initial public offering, or IPO, on the 30th of April 2026. This is a big step for any company, especially for a special purpose acquisition company or SPAC like this one. These companies are formed with the sole purpose of raising capital through an IPO to acquire an existing business. They sold 22 million units. Each unit was a bundle, one share of their Class A ordinary stock and half of a redeemable warrant. These units were priced at $10 each, bringing in a cool $220 million. Plus, they gave the underwriters an option to buy even more, up to 3.3 million extra units, to cover any unexpected demand. These units, ticker CAIIU, are what you might buy if you want a piece of both the stock and the potential upside from the warrants. The individual shares trade as CAII and the warrants as CAIIU. It's important to understand that these units are designed to be broken down into their components. The company's Class A ordinary shares have a par value of just $0.0001. This is extremely low and is common for companies that are going public, essentially meaning the stated value of the share itself is negligible. The real value comes from the company's operations and future potential. Now let's talk about those warrants. Each whole warrant California II gives the holder the right to buy one share of Class A ordinary stock at $11.5 per S-share. This means if the company's stock price goes above $11.5, these warrants could become valuable. However, they have an expiration date, which is not specified in this particular filing section, but is a critical detail for any warrant holder. All of these securities are listed on the Nasdaq Stock Market LLC. This is a major exchange, indicating that the company has met certain listing requirements. The filing also mentions a few checkboxes about simultaneous filing obligations. These are routine for some types of corporate actions, but for this filing, it indicates this 8K is primarily about reporting the IPO event. Collective Acquisition Corp, II, has elected to be treated as an emerging growth company, which is common for newer public companies. This allows them to take advantage of certain regulatory flexibilities, like extended transition periods for new or revised accounting standards. It is essentially a way for newer companies to ease into the full reporting requirements that larger, more established companies face. The core of this report is in Item 8.01 Other Events. This section details the consummation of their initial public offering. They successfully raised $220 million by selling 22 million units. Each unit, as we discussed, contains one Class A ordinary share and half a redeemable warrant. The IPO was priced at $10 per unit. Simultaneously with the IPO, they also did a private sale of warrants. This is often done to raise additional capital from early investors or the company sponsor. In this case, they sold 5837500 warrants called private placement warrants to their sponsor, Collective Acquisition Sponsor II LLC, for $0.8 each. This brought in another $4.67 million. So in total, they raised $220 million from the IPO and $4.67 million from the private warrant sale, for a grand total of $224.67 million. A significant portion of this money, $221.1 million to be precise, has been placed into a US-based trust account. This is standard practice for SPACs. The money in this trust account is held to fund the eventual acquisition of another company. It is essentially segregated funds waiting for a target to be identified and acquired. They've also provided an audited balance sheet as of the 30th of April 2026, which shows the funds from both the IPO and the private placement. This exhibit, Exhibit 99.1, is crucial because it is an independent verification of the company's financial position right after going public. Exhibit 99.1 is the audited balance sheet as of the 30th of April 2026. This is where we would see the details of the cash raised and how it is being held. For a company like this, a SPAC, the balance sheet will heavily feature cash and cash equivalents in the trust account. We would also see liabilities related to the warrants and potentially underwriting fees. Exhibit 104 is the cover page interactive data file. This is an important part of modern SEC filings, providing data in a machine-readable format for easier analysis and retrieval. The report is signed by Daniel Hoffman, who is the Chief Executive Officer. This indicates his role in the company's leadership and his responsibility for the accuracy of this filing. This is standard procedure, but it's good to see the names associated with the filings. So what does this all mean? Collective Acquisition Corp. California II, has just completed its IPO. They've raised a substantial amount of money, which is now sitting in trust, earmarked for acquiring another business. The structure with units and warrants is designed to attract investors by offering potential upside. However, there are inherent risks with SPACs. The success of the company hinges entirely on finding and successfully merging with a suitable target company. If they don't succeed in finding a quality acquisition within their specified timeframe, the money will be returned to shareholders, and the SPAC essentially dissolves. The private placement of warrants to the sponsor at a much lower price than the IPO units could also be a point of concern for public investors, potentially indicating a favorable deal for insiders. I'll be watching closely to see what kind of companies they target for acquisition, and whether they can execute a deal that creates real value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe for more. You can also join our Discord community linked in the description for further discussion.